Official Creditors Committee has not met, and so that's quite a big delay. It's not really obvious why there should be such a delay, given that it's just a sort of technical thing they just have to meet.
Also coming up, government to move all ministries, departments and agencies' accounts to the Bank of Ghana by end of year, a move expected to put pressure on commercial banks. And Ghanaian enterprise is set to benefit from up to £1 million of investments from counterparts in the United Kingdom.
There's an additional £1 million that we've identified particularly to help grow businesses and identify opportunities in the energy sector.
My name is Daryl. Kwawu. Thanks for being with us. Details coming up. In our first story, Ghana has a long way to go to restructure its more than 400 billion cedi debt. That's a session from rating agency Fitch. According to the UK-based firm, there could be a second round of domestic debt exchange program. Ghana is seeking to get debt relief of about $10.5 billion from external creditors for the next 4 years. Now, speaking on key credit stories of African sovereigns and banks, Senior Director in charge of emerging economies at Fitch, Toby Ellis, said talks on the external debt restructuring have kept long.
So far, the Official Creditors Committee has not met, and so that's quite a big delay. It's not really obvious why there should be such a delay, given that it's just a sort of technical thing they just have to meet. But, you know, I guess news from the IMF, the noises from the IMF have been quite positive, and Ghana's 2023 budget sort of put forward some fiscal consolidation measures. So the IMF seem to be pushing pretty hard. But still, I mean, we haven't had the Official Creditor Committee yet, so there's still quite a long way to go. Maybe the historic track record on the common framework of moving very slowly, maybe that's not a great guide. Maybe Ghana could be a bit different, but there's still quite a lot of work to do, and especially, as I mentioned, given that there might be more happening on the domestic debt front as well.
All ministries, departments and agencies, as well as government statutory funds, will have their accounts moved to the Bank of Ghana by the end of this year. This captured in a document to the IMF as part of an expected treasury reform to be undertaken by government. Here's George Jaffe with details.
The country's Financial Management Act actually requires government to operate a single treasury account at the Bank of Ghana. This is where all government cash, including monies received by covered entities, shall be deposited. Therefore, for some, it wasn't a surprise that this was captured in the document to the IMF as part of the expected treasury reforms that will be undertaken under the fund program. Launched in 2017, the single treasury account is expected to aid proper management of government's accounts and monitoring. Government in the document to the IMF revealed that enforcing this requirement will support effective management of government finances. It will also bring a lot more transparency in management of government accounts. But for some, this policy will come with its own shocks for the market. This is because most of these commercial banks depend on deposits coming from these ministries, departments and agencies as a major revenue source. So moving these accounts in these challenging times will not be good for some of these commercial banks.
Well, joining us on Zoom is research lead at GCB Capital, Courage Boti. Good afternoon to you. Thanks for joining us. First off, help us understand the thinking behind moving all accounts of MDAs and government's statutory funds to the Bank of Ghana as part of treasury reforms, we are told, under this IMF deal.
Good afternoon, Daryl. Yes, this was a reform under the last IMF program, really. I guess the idea, I believe the idea is this. Government has ministry, department, and agencies scattered all across the country, each of them operating accounts. And so ministry A, department A or agency B could have 50 million, 100 million, 200 million, 500 million, listed in different bank accounts all across, really. because you do not have visibility about the availability of funds in there, really, maybe your financing needs, you would have to resort to borrowing, or you don't even have an idea of, in terms of transparency, what each department agency has. If you have a single treasury account at the Bank of Ghana where all these funds are transferred into, you have a global view of what resources you have. By the way, these monies are actually monies mobilized by these banks from these department agencies that at the end of the day, probably part of it is lent back to government as borrowings, which government used to finance its programs and projects. So it might be the case that you're actually borrowing your own money to do programs and projects. But if you have visibility over them, and then you decide where to channel what to based on the needs of the various department agencies and what the surpluses are, you'll be able to determine effectively where to channel what to and manage your borrowings properly. It also brings about transparency that if I know Ministry A, Department A or B has this funds here, then it determines how much allocations we make to these agencies or departments thereabout. Bring proper visibility, a global view, and then proper management to those resources, really. So yes, I guess that is the objective of some of these interventions. It should have been the case long ago. I guess it was a program that started and maybe stalled along the way, because as part of the program we exited in 2019, we're supposed to transition all accounts onto the Treasury Single account. Some agencies may have migrated already, and I believe this last phase may be for the others who are not on it to move now to that single treasury account.
This move, analysts say, would put pressure on banks. How exactly, and what are the implications for the banking sector?
It is true. Yes, once those funds are being moved, it reduces what is available to these banks who have been holding these accounts all this while. But then I guess we are at a point where everybody have to earn their fees, right? I mean, if you are a bank and your job is to mobilize deposits and grant loans, you need to ultimately earn your money. And so probably this triggers, if you like, innovation in the banking sector to find new ways of mobilizing deposits they can keep on their books for long. By the way, government and its agencies will still mobilize or collect their fees and charges through these banks anyway. You go to some departments, agencies, and you see banks tell us they're collecting some of these money. These monies will come anyway. And so what it means is that there will now be a shorter holding period, because there will be a defined period within which you would have to lodge these monies or balances into certain accounts at the Bank of Ghana, really. So between when you mobilize till when you lodge them, you could earn your overnight fees and all of that on them. But really, long-term deposits that can go into loans and many other stuff, banks would have to earn their fees, really. And that is the challenge it throws at them.
Also in the news today, Fitch predicting a second round of domestic debt exchange, or restructuring if you like, saying Ghana has a long way to go in restructuring our over 400 billion cedi debt. What do you make of these projections by Fitch?
Well, that is if it's not happening already, because I'm aware the government is locked in negotiation with the exempted pension sector for about 29 or so billion. They are trying to find common terms to transition into the DDEP. Essentially, what it means is that the DDEP targeted 130 billion. In the end, that target reduced to just about 98 billion, really, when they exempted the pension sector and a number of other individuals and stuff like that. So the 85% success rate was in relation to the 98% target, but that leaves just about 65%, if you like, success rate, if you look at it in terms of the 130 billion, really. And if you bring in the broader picture of all domestic debts, including the IPP debts, the Bank of Ghana debts, the cocoa bills, and the many others like structured loans and things like that, the DDEP success rate of 85%, 83 billion in total, was just about 20% of the total domestic debt, really. So there is obviously a need to relook at the DDEP in a holistic manner to see which other debts can be brought into the picture. Now, the conversation is around how do we bring the domestic dollar debt into the picture. The conversation about how to restructure the 8.3 billion in cocoa bills. The conversation is about the 77 billion of non-marketable debt held by the Bank of Ghana. How do we bring it into the DDEP conversation? and then the exempted pension sector, really. So those are where the conversations are now. And so I believe the second leg of that DDP is even ongoing. And until we do that and bring down the terms, as in reduce the interest obligation and extend the tenor of those debts sustainably, we may have to come back to the conversation again. The examples of your Argentina and the many others that did debt restructuring ultimately did a second round of it. And that is, if you do not make it deep enough and cover the whole scope of domestic debt, you may have to come back at some point. And if you look at it, we have successfully reduced for the general category bonds interest rate from 19.1 average to now just about 10% really, and 9.1 on the average. And if we can succeed in bringing every other domestic debt into similar brackets, really, we would have made progress and then extended the tenor, which gives us a breathing room to manage our fiscals going forward. So I guess it's something happening already. And if we do not succeed in exchanging the remainder, 80% of the domestic bonds outstanding, which have not been exchanged, then maybe that conversation could come up later again. But I hope we succeed in this current phase. Second leg of the debt restructuring.
Right. The Senior Director of Fitch, Toby Ellis, we heard from him at the top of this bulletin, talked about the delays with the debt restructuring, the external debt restructuring. A bit of concern about that. The challenges we are facing right now, are they to be expected, or we have not gone about this the right way?
Well, I mean, the examples of Zambia, Chad, and the many others that, or the few others that preceded us shows that it is not a straightforward negotiation. Zambia has been at it for a little over 2 years now, trying to achieve external debt restructuring. I think the likes of Chad are also at it. Sri Lanka is at it, and a number of others really. So the delay is not a surprise. It's something that is characterized with the common framework as we have known it so far. What is Ghana doing different to hasten the process really? I think those are the things that should be of interest to us. I understand a proposal is now on the table for these bilateral creditor committee to consider. Maybe a first meeting is yet to be held under the umbrella of the bilateral creditor committee co-chaired by France and China. And so until those meetings start and then we know the stance of these bilateral creditors on the terms government is proposing, that will determine whether the conversations are going to delay or not. And so the background conversations, I believe, are going on. Government would have a fair idea of what the demands of these individual creditors are, and that would actually go into the proposal that is on the table. So depending on where the variance is or how large the variance is, that will determine the speed at which we may reach a conclusion or not really. So it has been a characteristic of the common framework so far. Let's see how government of Ghana deals with it differently from the others.
Can the nation afford a second round of domestic debt exchange?
Like I mentioned, it's actually ongoing. The sectors that were excluded are now being persuaded to come into the conversation really. The difference is that unlike the main one, yes, banks are exposed to cocoa bills, but the size is 8.1 or 8.3 billion in total as we speak. So its impact on profits of banks, impairments, and even solvency issues may not be so great. The Bank of Ghana debts are non-marketable and are held by Bank of Ghana. That becomes a conversation between the government of Ghana and an agency of the government of Ghana really. So you do not expect a lot of drama from that side. The bit about IPPs is what we know that IPPs are saying they are not open to debt restructuring. And I've actually given ultimatum that government should pay them part of their obligations due, otherwise they'll shut down the thermal plants really. And then the bits about structured loans from the banks, yes, again, it will have impact on these banks, but you and I do not even know what the exact terms may be. So those conversations, I believe, are ongoing, and it's inevitable that would have such restructuring happening, maybe in due course, but maybe the consequence will not be as dire as we have seen with the DDP itself, because that one hits the banks a lot more.
Karit Buti, thank you so much for your time. Research lead at GCB Capital. I appreciate your insight. Well, there's fresh funding support headed the way of Ghanaian businesses as government signs a new deal with the United Kingdom that will see up to £1 million in investor monies injected into local businesses here in Ghana. This deal, which is being spearheaded by the UK-Ghana Business Council, is part of the larger trade partnership agreement between the two countries signed in 2021. A new investor group has also been set up to identify investment opportunities in Ghana and ultimately support the country's economic recovery program. Manuel Kranting reports from London.
The UK and Ghana are hatching plans of how to further trade relations. The UK-Ghana Business Council has been operating since 2018, looking for mutually beneficial opportunities. Minister for International Business in the United Kingdom, Nigel Huddleston, says the United Kingdom government means well.
We've got a trade agreement, a trade and partnership agreement with Ghana, and we've just had the Business Council, which we have every 6 months or so, to make sure that we both make the best of that partnership arrangement, that trade agreement. But also, there's all sorts of other things that we're doing. So there's an additional £1 million that we've identified, particularly to help grow businesses and identify opportunities in the energy sector. And also, we've launched and announced a new investor group as well, an investment group, to identify additional investment opportunities for British companies and others into Ghana. So it's part and parcel of a much wider package to build the relationship and the trading opportunities in particular.
He makes an interesting comparison between the motives of the United Kingdom and its renewed interest in Africa and in China.
We want to be there because there's advantageous opportunities on both sides. We want to do trade because it creates jobs, it creates opportunities, generates taxes, removes people out of poverty. But we've also got a lot of activity going on in aid in Africa as well. And that's an important part of our philosophy as well. So we're there to help and help those economies grow. Not every country is motivated by the same things, but we are very much motivated by trying to make sure our friends and allies can seek some of the economic opportunities.
Ghana returns to the International Monetary Fund for yet another bailout. The UK is looking to provide support for the West African nation.
Well, we definitely support the agreement with the IMF. It's really important. It's really important for Ghana. And we've had really constructive conversations as well about how we can help and support Ghana with its development, with its ability to raise taxes and all sorts of other areas. So we're there also to cooperate and provide advice. So we've got a really important trading relationship, but it's the valuable relationship we have as well with sharing experiences that can also help. That can be government, but it can also help identify opportunities, for example, with the City of London.
With this motive, will the UK be happy to take haircuts, given the external debt restructuring admonished by the International Monetary Fund?
Now, some of the things that you're mentioning there are private sector decisions as well. But the key thing is, the key thing is that we're really, really keen to work with our partners, in particular Ghana. We've got a long and established relationship. Their economic progress is good for Africa and it's good for the UK. So we will always engage in constructive conversations to make. Well, we'll always engage in constructive conversations to see what we can do to help.
Well, it waits to be seen how all of this pans out. My name is Manuel Kranting.
All right, Deputy Chief Executive Officer of the Public Procurement Authority, Kwawu has said the Ghana Electronic Procurement System, GHANEPS, will be the only way to conduct procurement in the country by the end of 2023. Speaking at the end of a training program for procurement officers in Sunyani, Mr. Prempeh said the usage of the electronic system by both the public and private sectors will help achieve value for money and eradicate corrupt practices, amongst others. Precious Semifo has more.
The electronic procurement system adopted by many African countries, according to the World Bank, will improve government's data generation and performance analysis in capital budget spending, hence increasing transparency in procurement. Ghana Electronic Procurement System, GHANEPS, was launched in 2019 with its implementation in phases. As part of the rollout, the Public Procurement Authority held a 5-day training program for 63 procurement officers across all sectors and a 13-member team from the Gambia Procurement Authority in Sunyani on the use of the system. Deputy Director of PPA, Andrew Kwejobefi, speaking on behalf of the Deputy CEO, Kwame Pepra, said they will achieve value for money when the system is fully implemented by the end of 2023.
There have been over 1,500 tenders posted through the system so far, with 2,070 suppliers responding to them. The system has led to 97 framework agreements and 1,001 awarded contracts with a value of 72,480,301.80 pesos, Ghana cedis. The use of open data contracting system helps improve efficiency and effectiveness, leading to achieving value for money and detection of corruption. The implementation of EGP could also lead to lower price of goods, works and services because of increase in competition.
The Human Resource Manager of the Gambian Procurement Authority, Aliyu Yusuf Akar, relishes the motive of the system.
As we know, Ghana and Gambia have the same local conditions. Salaries are not too high, so these may be reasons for corruption. However, when you see any promising society moving from a manual-based system to an electronic and more digitized system, then you know the motive is to cut down on corruption. So where there's digitization, there's less human interference. Thus, where there's less human interference, that means the possibility of corruption is minimized. So that's the number one take home.
Some participants also spoke about their impression of the system.
Transparency and accuracy. That's what I'm taking home right now. And the thing is, it's paperless. I'm going to my facility to tell my med soup right now that there's no need for us to buy those bulk A4 sheets and the toner and that's although fine, we use them, but it has reduced drastically because of the canals.
If we do not have the suppliers, contractors, service providers with the right capabilities to respond to it, then it will come up to nothing. A few people is going to hijack the system and we will not get the benefit that we are supposed to get.
Precious Semevo, Joy Business, Sunyai.
Now, shareholders of Ben's Oil Palm Plantation have approved a cumulative dividend payout of 2.74 pesos per share for shareholders for the 2022 financial year. The board, after reviewing the 2022 full-year performance, recommended the payment, which represents 45% of profit after tax and 95% increase over the previous year. Speaking to shareholders at the annual general meeting in the Western region, Chairman of the Board of BOB, Dr. Alfred Brymer, attributed the performance to factors including an increase in palm oil prices and prudent management of costs.
These increases, which are above the revenue growth, is attributable to prudent cost management and improved operating efficiencies in agronomy and palm oil meal management. The company is duty-bound in line with the requirement of IFRS, the International Financial Reporting Standards, to, as it were, place fair market value on the plantation every year. For 2022, of 1.619 million was included in the profit that we're reporting arising from an appreciation in the value of your plantation. This is basically just less than 1% of the total profit. So significant, I mean 99.9% of the profit actually was generated from the underlying business. And this, I think I need to bring to your attention. Our distinguished shareholders, it is absolutely clear that we are in business to make money. You're buying shares to make money. And the money that you make is in the form of dividend. So our distinguished shareholders, ladies and gentlemen, the board, after reviewing the full year performance of the company in 2022, shall be recommending a final dividend of 0.9435 per share to be approved by the shareholders during this annual general meeting. This is in addition to an interim dividend of 1.1308 per share declared by the board after reviewing the year to October performance of the company.
All right, and that's it for our program this afternoon. There is more news on our website, myjoyonline.com/business. Myjoyonline.com has a new interface. You can read all of the latest business stories, including MESTI upholding role of women in energy transition. myjoyonline.com/business. My name is Daryl. Thanks for watching. We will be back same time tomorrow.